You buy a stock of a company that will deliver you over time an amount of free cash that is much higher than what you pay for. That's the simplicity of it.
All right, welcome back inside our proactive newsroom. Joining me now is Cedric Jacque. He is a partner and investment manager for Lloyd Capital. And Cedric, it's good to see you. How are you?
It's good to be with you, Steve. I'm very good. Thank you.
Yeah, good to have you along. Excited to see it. I want to talk to you a bit about first off where you work. Tell me a bit about Lloyd Capital and who you are.
Sure. Lloyd is we're based here in Zurich, in Switzerland. We're an independent asset manager, created about 10 years ago. We manage about 2 billion of assets, 10 people. And our main investment capabilities is in public listed equities. We particularly have a flagship strategy we call the Focus Equity Portfolio Strategy that our client access through segregated mandate, or more recently to an ETF that we launched a year ago.
Okay, tell me a bit about the strategy behind this Focus Equity Portfolio.
Sure. It's a publicly listed stock strategy without restriction of sector, size, geography. It's relatively concentrated. 80% of the asset is invested in 20 securities. I would say the particularity we have is that we view stock as piece of businesses and not piece of paper to be traded. So we really act as owner. We really long-term in our approach. Every time we buy a stock, we ask ourselves whether we would be fine buying the business if the stock market were closed for 10 years. So it's basically a portfolio of businesses with superior fundamentals, competitive advantages, good profitability, and also very importantly, stocks that we buy when the market offers a favorable price.
Yeah, so you have a criteria of how you select these stocks. Then you just mentioned some of the factors that you look at. It sounds like you do due diligence on them.
Yeah, as we say, investing is simple but not easy, right? Simple why? You buy a stock of a company that will deliver you over time an amount of free cash that is much higher than what you pay for. That's the simplicity of it. Now, that's not easy because you need to obviously determine what will be the long-term earning power of these businesses and how it will evolve over time. That requires deep understanding of the business you analyze, understand its competitive advantage, its pricing power, its the criticality of its product and services, its ability to reinvest to compound its value, and also analyzing the quality of its management. How shrewd are they in their capital allocation, and we analyze the culture, the incentive system, and so on and so forth. And all that requires obviously a lot of work. We study them in and out, do field trips, meet their customer, talk to their management, and so on. I think the one thing on how you do that is definitely the deep analysis to it, but it also requires a lot of discipline and sticking with the business that have the quality that is required for you to have a high conviction. That's very important. And then deploying only when the price offers you enough margin of safety. That's important just to generate the good return over time at low risk of loss, and to stick to the one first and I would say only investment rule that you have in investing is don't lose money. That's really how we approach things in a very conservative way.
Yeah. Tell me a bit about some of the investment opportunities that you've seen recently. Where are things sort of exciting you in the fund?
Sure. In general, investment opportunities is coming from, as I say, margin of safety, a discount to fair value. All these things, where are they coming from? It can be because an asset is overlooked in terms of quality. So we've seen, for example, in China, a few of these. We have invested in a company called H World that is as big as Hilton in terms of number of room, and that trades for about $15 billion of market capitalization. So it's one of the biggest hotel chain in China. We visited them. I was in Beijing in September. Visited 10 of their hotels and their general manager. Amazing business that compounds and that grows quite fast and is building the backbone of Chinese tourist infrastructure. Founded by the co-founder of Trip.com. So that's the kind of things that we're excited about. It's kind of a hidden gem that no one cared to look for. A big area where we found ideas is in the software businesses. AI have created a lot of a negative story around disruption, and basically the market tend not to discriminate in that case. Everything that got labeled software got put on sale basically, and in a bag as being disrupted. And we have found, when you care for cherry picking and looking really asset by asset, you found some very interesting discounted opportunities. One of them being a company called Constellation Software out of Canada, where you're based, Steve. I'm sure you heard of them. Founded by the legendary Mark Leonard. I mean, Constellation is typically it basically ticks all the boxes of what we like in the business. It acquires mission critical vertical software, meaning software that if the software goes down, the customer's operation goes dark, which means in the worst case, bankruptcy for the customer. It tends to have businesses that don't have much competition, and if you mix the two together, that means high pricing power. And the businesses of Constellation basically nurture the relationship with their customer in a very symbiotic manner. So that creates also a very high barrier of entry that very few dare to test over time, and that means that as a result, it just generates very high return on invested capital. Now, organically, that's an amazing business. The touch that Mark Leonard brought to it, he built a system where they redeploy the free cash flow over and over, acquiring new businesses of the same quality, sticking with a very disciplined approach in terms of hurdle rate. So they only deploy the capital when they can make a lot of return on it. And they run the business in a very decentralized manner. So you kind of create a system that is extremely scalable. The scalability have worked wonder. Since the IPO in 2006, they've compounded at 25% a year. So that's a kind of gem that we always want to buy. The problem with that, they're very naturally expensive, and you can rarely buy them at the price that is reasonable. And with this story now, with AI selling software indiscriminately, Constellation got discounted by 50% from its peak. We could acquire them at 14 times the free cash flow, which, if you think of it, is like a 7% earning yield, a free cash flow yield for recurring free cash, and the ability to continuously redeploy that will make it grow. We believe in the double-digit rate, which promise you, with very little risk, a higher return. So this is the kind of opportunities that we are excited about, and when we see that, we do what every active manager we believe should be doing. We deploy a lot of cash aggressively into it.
Yeah, makes a lot of sense. Exciting times for sure. Cedric, thanks so much. Good to see you, and appreciate you giving us a little update on the Focus Equity Portfolio Fund. So thank you very much.
Thank you very much, Steve.
Good to see you. That is Cedric Jacque. He is the investment manager and partner with Lloyd Capital.